So today I'm going to be talking about Travere Therapeutics, who are currently sat at a stock price of $13.48. That puts their market cap at $1 billion. I'm going to be going through the bull and bear points for this company, and in the end I'm going to be talking about their current stock price and where I think that might be heading. Travere currently have a drug for cystinuria. They have Filspari, which has recently been fully approved for a rare genetic disease of the kidneys called IgAN. They are also hoping to get this approved for the rare kidney disease of FSGS. And they currently have the drug pegtibatinase, which is currently in a phase 3 study for the rare disease of classical homocystinuria. So the first bull point in the list that I want to talk about is the Filspari potential. So this has already been released on a partial label for about a year now, and they're already turning over about 25 million a quarter. And if we go in and check some more details, we can see there's a number of other ball points for this. And these are ordered by priority. So at the top here, we have the label broadening, which was only accepted by the FDA at the start of this month, September. And we can see here that they will now have access to over 70,000 patients, whereas before they'd estimated that at between 30 to 50 patients. So that's a significant step up, about a doubling of the available patients. And on top of that, the KDIGO draft guidelines have been updated. So now not only are they recommending the use of Filspari, but they are also recommending that measures are taken much earlier at just 0.5 grams of proteinuria per day. Again, this will significantly increase the amount of patients requiring Filspari. So I didn't mention this before, but in their presentation, Travere mentions that they have a $10 billion market opportunity. Now, of course, I don't think they're expecting to get that $10 billion, but they are obviously trying to get as much of that market share as possible. And at the rate which they are currently growing, I would expect them to reach $1 billion revenue peak sales. But with the label broadening and the KDIGO draft guidelines, I really think that they could double or maybe even triple this. So I think the potential for Filspari at this point is quite exciting, and I'm really looking forward to the next couple of quarters. So the next ball point is Filspari for FSGS. And unfortunately, they did originally get rejected on this because they missed their primary endpoint, but they are doing a study called the Parasol study, which they're expecting to get finished by the end of 2024. And with the results of this, they're hoping to talk to the FDA to find a path to approval. And if they were able to get approval, then that would open the doors up to another 15 to 30,000 patients. So finally in the list are the royalties and the licensing. Now this is really quite interesting because they have up to $900 million available, as well as tiered royalties up to 40%. Now considering that the company is currently valued at just over $1 billion, this is a considerable amount of money that should raise the stock price. So as well as their Filspari potential, they also have another drug in the pipeline. And this is second in the list here, the pegtibatinase potential. Now, it's still quite early days here, as we can see from the bear point. They're not actually expecting results in until the start of 2026, but this drug could open up a further 12,000 patients, and the phase 3 is currently underway. Okay, so that completes the ball points for this company, and I think that they are some really good ball points. But of course, we can't just look at the ball points, we have to take a look at the bear points as well. And top of my list here is the competitive market. They already have a competitor called Tarpeo, which is selling really well, as well as numerous other drugs in other companies' pipeline at various different stages. This could set significant challenges for Filspari and limit their market share. You could see why this would be my number one concern for the growth of this company. So the next bear point is the high cash burn. So they are currently burning through $70 million a quarter. Now this is quite a lot of money, and it only actually gives them 5 quarters of runway with their current assets. If they aren't able to increase their revenue quickly, then they're going to have to find another way of raising cash. So the next bear point is that Thiola has expired. So this is a drug that they currently have, which makes up 50% of their revenue. And it's likely that this expiration will decrease the revenue from Thiola going forward. And that's going to have to be replaced by Filspari, which could mean that profitability will take longer to arrive. So the last ball point in the list is the huge amount of debt. So they are currently carrying £500 million worth of debt on their balance books, And this, of course, will need to be repaid once profits start coming in. Okay, so that brings us to the end of the bear points. And just a reminder here that you can subscribe to these ticker points. So anytime that any are added or updated, it will send you an email to let you know, so you can keep up to date with the stock. So you just have to click here, and if you aren't logged in, you just have to provide your email address, and it's as simple as clicking that button. And then you can also do the same for the catalyst, which on the next page, I've already subscribed here, so it's grayed out. But this also brings us neatly into the catalyst section. So this is what we have to look forward to this year. We have the earnings report, the Q3 earnings report, and this could see the start of the turnaround for the label expansion. Hopefully the Filspari will have much better sales in this quarter. Even though the label expansion will take a little while to hit the sales, I'm still hoping for a bit of an uptick here and a full uptick in the next quarter. On top of that, we have the Parasol study results to look forward to. If these come out positive and the update with the FDI is positive as well, then this could signify a significant potential increase for Filspari. And on top of that, we have the pegtibatamase top-line results, which are expected at the start of 2026. Okay, so let's take a look at the financials for the company. And we can see here it's been on an absolute tear recently. So in April of this year, it was down at $5, just over $5, and it went up to $13.50. So that's nearly 3x in about 5 months. So congratulations to the long-term stockholders. I would say though that I often see with these rapid stock price rises, a stock offering from the company. So I would be a little bit worried about that at this present moment. Taking a look at the financials, we can see here that there's been some solid growth here. Last year they were sitting around 30 million a quarter, and they're now up to 55 million a quarter. You can see a 13 million increase in the last quarter. There is a bit of variation here up and down, but a steady increase nonetheless. However, if we go down and look at the net income, we can see here that it's significantly negative. And we can see here from previous quarters that it's actually been much higher. So they are taking steps to improve that. And then if we take a look at the balance sheet, we can see here that they have current assets around 325 million. Now that would normally be quite healthy, but with the $70 million cash burn every quarter, that can disappear fast. And then on top of that, they have total liabilities of just over $500 million, which is a significant amount and will need to be repaid. So my thoughts for this company are generally really quite positive. They have their Filspari already selling quite well, and I think that values the company currently at around $1 billion. But with the label broadening, the KDIGO, and their royalties, I think there's really a chance for the company to 5x from here. Of course, the question does lie around the competitive market, and will the competitors be able to outshine Filspari? And of course, with that, only time will tell. But I don't think the risks are too high with this company. I do think that Filspari will be able to maintain a market share that would justify its current market cap, even in a competitive market. And then if it does manage to outshine its competitors, then we could see that 5x. So overall, I do think this company is worth some additional due diligence. Don't forget to like and subscribe if you've enjoyed this video.